The Get Rich Slow Club podcast is a collaboration between Tash Etchman from Tash Invest and Anna Christina from Perla. The Get Rich Slow Club acknowledges the traditional custodians of the land we record on. From coast to coast, across land, waters, and communities, we pay our respects to elders past, present, and emerging. Any advice is general and does not consider your financial situation, needs, or objectives, so consider whether it's appropriate for you.
Welcome to today's Investing Short, where we explain one concept quickly and clearly to demystify the world of investing. Today, we are talking about index funds.
But first, what is an index?
An index is a benchmark that tracks the performance of a specific group of assets, such as shares, bonds, or other investments. Now, the thing to note, though, is that index and indices is essentially the same thing. Here in Australia, we kind of use the two and they get interchangeable. So if you hear us talk about an index or different indices, that's the same thing.
An index is just essentially a set of rules. So some examples could be the ASX 200 in Australia, which is the top 200 listed companies on the Australian Securities Exchange. So if you buy an index fund that tracks the ASX 200, you will have an index fund that holds the largest 200 companies in Australia, which is amazing. Another really popular index is the S&P 500, and this actually tracks the top 500 largest companies in the US as well. When you hear someone say an index fund, they might actually be referring to an ETF or a managed fund. So index funds and ETFs, exchange traded funds, both aim to track the performance of a specific index, such as the ASX 200, but they differ in structure and how they are traded.
ETFs are traded on the stock exchange like shares, allowing investors to buy or sell throughout the trading day at market prices.
Many ETFs do actually track indexes, so you might often hear them called index funds or ETFs, but usually people are often referring to the same thing.
Yeah, so if you hear someone say, oh, you should invest in low-cost index funds, chances are they're actually thinking about low-cost ETFs that track a specific index.
There are so many different indexes out there. We've just named two popular ones, but there are tech ones, country-specific ones. There are like small cap ones or emerging market ones or like random food-specific ones that I haven't heard of until recently. So there are many different indexes. Index funds are essentially just a fund that follows a set of rules.
Thanks so much for joining us. If you found this episode helpful, please rate us 5 stars, write a review, or share with a friend. If you're new to investing, make sure to listen to our first 10 episodes. Follow us at Get Rich Slow Club or Tash at Tash Invest or me at Anna Christina.
This show was brought to you by Natasha Etchman, who is an authorized representative, 1299881 of Guideway Financial Services, AFSL 420367, and Perla, who is an authorized representative, 1281540 of Sanlam Private Wealth, AFSL 337927. Knowledge is power, especially when it comes to investing. So make sure you check out our financial services guides and read the product disclosure statement and target market determination for any investments you're considering. See our show notes for more info.